sector accounting. We are looking at public sector accounting. Public sector accounting. Public sector accounting. Public sector accounting. Yeah. Public sector accounting is what we are looking at. Now, first of all, it will be very important for us to know what public sector means. What do we mean when we talk about public sector? Public sector. Public sector. So when we talk about public sector, ladies and gentlemen, we are looking at all those organizations that don't exist for profits. So zero profits. We talk of zero profits. Of course, this is just theoretically. At the end of the day, most of them are really profitable, but profit making is never their main objective. Yeah, profit making is never their main objective. They are there to issue what we call essential services. They are there to issue essential services. So whenever we talk of PSA, public sector accounting, we are looking at those organizations that are not for profit. Not for profit. And I was giving a very good example here. For example, if you look at Kenyatta National Hospital, ladies and gentlemen, Kenyatta National Hospital is really a reputable organization in East Africa. It offers, in this case, here, top-notch medical services. But when you go there as a patient, you'll be told to go and queue to some area there. Yeah, you join some queue there, you go and make some payment. The payment will range between 50 shillings to 200 shillings maximum. But the kind of service you'll get from Kenyatta National Hospital, even being able to just see a doctor like this, we know how much it costs. We know how much it costs, ladies and gentlemen, whenever you go to see a doctor in a private clinic. It's very expensive. All right. So at the end of the day, these people, basically the 200 you are paying is for your stationary etc. Otherwise, the main service is actually free. All right. So if you look at, in most cases like Kenyatta National Hospital, if you were to remove any government transfers to the hospital, any government support to the hospital, those guys will make huge deficits. They'll make huge deficits. So whenever we talk about public sector accounting, ladies and gentlemen, we shall always think about the not-for-profit organizations, which include national government. So if you're an accountant, yeah, so national government, we have county government, yeah, county governments. We have, in this case here, for example, public, primary, and the secondary schools. Yeah, public, primary, and secondary schools. We have parastatals. So many organizations, really. Parastatals. Yeah. We have, ladies and gentlemen, non-governmental organizations here. Non-governmental organizations here. Like which ones here? NGOs, like, for example, the United Nations. So if you look at United Nations, when they are making their financial statements, ladies and gentlemen, they will be able to make financial statements just the way, like how the national government, like Kenya government, makes their financial statements. Why? Because both are not for profit. Yeah, UN in this case, it does a lot of activities which are humanitarian in nature. When, for example, they get to a drought-stricken area, you can imagine how much it costs the UN. At times, in this case, just to deliver that food there, they are looking at this food going to, for example, some areas like Turkana through helicopters. So the expenditure will be up there. So in this case here, UN itself, for it to be able to offer those kind of services, then they would need some support from various governments. But the NGO itself, of course, is a non-profit. It is not for profit organization. Ladies and gentlemen, all these organizations we've been able to list here, They normally use what we call IPSAS for financial reporting. For financial reporting, what do they use? They use IPSAS. IPSAS stands for what in full? IPSAS stands for International Public Sector Accounting Standards. IPSAS stands for International Public Sector Accounting Standards. That's IPSAS. You can hear the word public sector. All right. Remember, in the private sector, which standards do we use in the private sector for financial reporting? Private sector, we use in this case here the famous International Accounting Standards or International Financial Reporting Standards. International Financial Reporting Standards. International Financial Reporting Standards. International Financial Reporting Standards. All right. Now, ladies and gentlemen, please listen and listen to me very well. Listen and listen to me very well. I can see in this case here, there is a message here, ladies and gentlemen. Motiva. Okay, so they don't have any profit motive. I suppose that is what Stanley wanted to say. And I'm so happy because I can see now we are 26 during working time, which really is very, very good. 26 is a good number if I'm talking about the time. Most of you are still working and yet you've created time to be with Mwalimu here. Now, ladies and gentlemen, please listen and listen to me very well. We are saying as an accountant, whenever you hear about private sector financial reporting, IAS or IFRS, International Accounting Standards or International Financial Reporting Standards. That's a private sector accountant. But a public sector accountant, whenever you hear of a financial reporting, always know that public sector entities shall use what we call IPSAS, International Public Sector Accounting Standards. Up to here, ladies and gentlemen, somehow are we together? Are we together somehow, ladies and gentlemen? Are we together somehow, ladies and gentlemen? Are we together somehow, ladies and gentlemen? Are you able to hear Mwalimu? Are we together? Great. Thank you so much. And of course, to get us started there, we must understand what we call IPSAS number 1. International Public Sector Accounting Standard number what year? Number 1. Accounting Standard number 1. Accounting Standard number 1. Number 1. Number 1. All right. Now, ladies and gentlemen, accounting standard number 1, this is what we would want you to appreciate. So I'm sharing some document which I'll be able to give you immediately after our class. Yeah. Great. So IPSAS number 1, there are over 40 IPSAS. Over 40 IPSAS standards, over 40. The very first IPSAS talks about presentation of financial statements. Presentation of financial statements. So how should we have, for example, what we call a statement of financial performance looking like? A statement of financial performance is what we call income statement in the private sector. So then how should it look like? All right. If it is a statement of financial position, which is equivalent to our statement, actually same balance sheet, right? Then how should it look like? And which, for example, statements do we need to have as a public sector entity to say that now we are IPSAS compliant, IPSAS compliant? So we are told here, IPSAS number 1, IPSAS number 1, great. So then we are told here IPSAS number 1, presentation of financial statements objective is to prescribe the basis for presentation of general purpose financial statements to ensure comparability with the entity's previous financial statements and with those of other entities. The scope applies to all public sector entities except GBEs, government business enterprises. Government business enterprises, they use IFRS because basically the government have given those particular entities to the private sector. Yeah, Remember, also government is an investor. So the government will come and invest in companies like KenGen. You see, KenGen. KenGen is not a public sector per se. All right, it's not public sector per se. Why? Because KenGen is able to have their shares, for example, traded at the stock exchange. All right. They are able to, in this case here, run without any help from government. So the government basically invests in it, takes few shares. It could be controlling interest, but the other stake in this case here, they give it to the private sector by listing the entity for purposes of raising capital, for purposes of selling stocks, selling shares. All right. So if it happens that this particular entity that the government has taken up, ladies and gentlemen, is doing business, no more trading, then it will be called a government business enterprise. And a government business enterprise shall not use IPSAS. It's a business, you know, it's there to make profits, you know. So it shall not use IPSAS. If that is the case, then because it's a business, I mean, it will be able to use what we call IFRSs. Otherwise, all the other sectors in public sector, all the other sectors in government, which fall under what we call public sector enterprises, which are not there for any profit, they are there to offer essential services, they shall report their financials using what we call IPSAS, Great. Now, ladies and gentlemen, the key requirements, components of financial statements. An IPSAS compliant complete set. When I come in this case here to your secondary school, now that we have gone what we call IPSAS accrual. When you call me to come and audit, and I wish very soon the government will be able to give my audit firm, that is Aura and Co, an opportunity to audit secondary schools, to audit. You know, currently the Office of the Auditor General is subcontracting some services to private audit organizations to assist them because they have so much. So should they appoint Mwalimu here, Aura and Co, certified public accountants, to come and audit your primary school, where you are the financial accountant, the bazaar, ladies and gentlemen, if your financial statements will be IPSAS compliant, we expect you to be having a statement of financial position, what basically we call the balance sheet, a statement of financial performance, a statement of changes in net assets or equity. You must have a cash flow statement as per IPSAS number 2. Then you must have what we call comparison of budget and actual amounts as per IPSAS number 24. Ladies and gentlemen, remember, on the face of the financial statements, on the face of these financial statements, you've told us, for example, if it's statement of financial performance, we have revenues. You've told us out of these revenues, some in this case here, we got some money from donations. You must put in brackets. Under donations, you must put in brackets note 1, for example. And then you will be able to have down there at the end of your financial statements, we shall expect you to have notes to the financial statements. And then, of course, note 1 will be about, for example, that's just an example, donations. And tell us, for example, who the donors were, how much in this case here they gave you. Is that donation coming up with some conditions? Have those conditions been met? Because if the conditions have not been met, then you can't disclose that donation. So we are saying that at the end of the day, we must have notes accompanying the financial statements for purposes of what here? Further explanations. For purpose of further explanations. Ladies and gentlemen, I would want to pause a little bit. Why? Because I need to celebrate a little bit. We've hit our 30 students number, which really is very, very good. Thank you so much. I would not have gotten that number if it were not for you guys who shared and invited your friends to join us through that link. Thank you. So then we continue. Now, ladies and gentlemen, whenever we talk of IPSAS 1, we've been told in this case here what we need to have. Then we have structure and the content. So for example, the statement of financial position, what must you have? You must have this to avoid getting a qualified opinion from the Auditor General, Office of the Auditor General. You must have this. If it's a statement of financial position, we expect you to have a segment where you capture assets and classify these assets into current and non-current assets. Then we have liabilities, current and non-current. And then we have net assets. You must have those three key things. Yeah. And then, ladies and gentlemen, we have statement of financial performance, which can be a function or nature and must disclose. This statement of financial performance, which is the same as an income statement, you must basically give us revenues and what year expenses, which at the end of the day, when you deduct this, you'll either end up having a surplus or a deficit. Then if, for example, the government sold a few things here and there and they made a gain, this has to be disclosed. If they made a loss, these have to be disclosed. So, ladies and gentlemen, for us to be able to understand everything that Mwalimu is talking about, I would want to refer ourselves to a past paper. I would want us to go to April 2024, question number 5. 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 Once you get that question, ladies and gentlemen, could you kindly put your thumbs up? Put your thumbs up. Put your thumbs up so that I can continue. Yeah. Put your thumbs up. That's financial reporting. That's financial reporting. And I'm looking at April 2024. April 2024. April 2024. April 2024. Is there somebody who has been able to get it? It was a morning paper, question number 5. So April 2024, question number 5. For those of you who do not have it, you can use my screen and get, in this case here, to do what here? To basically follow through. Now, ladies and gentlemen, this is the question that I would want us to do. This is the question that I would want us to do this morning. Yeah, Mazuri Limited. Mazuri Limited. Mazuri Limited. So question number 5. Are we ready for the question? Somebody, are we ready for the question? Are we ready for the question? Are we ready for the question? Please give me a response there. Yeah. Yeah, now we can do the question together. We can do the question together. Now, ladies and gentlemen, in this particular question, you start by reading the requirement and get to see the number of marks. Yeah, so in this case here, for example, the first question, they want us to give them a statement of financial performance for the year ended 30th June 2023. And then number 2, a statement of financial position as at 30th June 2023. Both of them are giving me 6 marks. 6 marks. So I will start with a statement of financial performance. I'll start with a statement of financial performance. Remember what IPSAS 1 has told us about this SPI, a statement of financial performance. What it has told us is that this statement basically will have a revenue section and an expenses section. Yeah, and then we shall be able to deduct expenses from revenue to either get a surplus or what here? A deficit. Yeah, so remember the name of this company, not company, but public sector entity. Yeah, the name here is, Ministry of Public Works. The year is 30th June. So we have Ministry of Public Works. Ministry of Public Works statement of financial performance for the period ending so they've given us a period, very easy things, for the period ending 30th June 2023. 30th June 2023. You guys have a lot of space. You can write there in full for the period ending 2023. Now, ladies and gentlemen, I would want in this case here, we get started with revenues raised by this Ministry of Public Works. Could you kindly give me examples of the revenues you expect this kind of a ministry to get? Yeah, remember, because these are basically public sector enterprises that are out there to offer essential services, they can't stand on their own. So they will need the bigger brother to support them, the national government. All right. So we must get transfers from the exchequer. I'm just giving you examples, yeah, of various revenues that we expect to see. So we have here revenue coming as a result of transfers from the exchequer. Exchequer is also known as the consolidated fund, the one in this case is being controlled at the National Treasury, the one that is being sat on by CPM body. Yeah. Then we expect, ladies and gentlemen, to get transfers from other ministries. Because like this Ministry of Roads or Ministry of Public Works, these guys are doing lots of business with, for example, Nairobi County government. They construct roads or even do supervisory duties on their behalf. Or they even, they have so many engineers. They even have their engineers, in this case here, designing the roads for them. So then the other ministries will be able to also do transfers. Ladies and gentlemen, these guys will have to license. I'm just giving you examples of how they raise revenue. What is their business model like? Ministry of Public Works, where they own the roads. For example, if you want to put up a billboard, you have to be licensed. So we expect license income. At the same time, we'll get people who do funny things on the road. When they do funny things on the road, they will be fined. So we have here fines. It's a very good example of an income. All right? And so many others, right? So then I'm going to project my board here, so that, or rather my paper here, so that you guys can easily get to tell me which line items are revenues. You guys are great students. I expect you to jump in. And now we are 44. I can't believe this. Great. So like, for example, we start here. Let's start here. We start here. If you look at this very keenly, the first thing that I would want you to see, ladies and gentlemen, is this one here. Accumulated fund as at 1st July 2022. If you allow me to explain something about this accumulated fund, I will be able to do that. Remember, in the private sector, we normally say assets, our assets, of course, must be fully financed. They must be fully financed by who? They must be fully financed by who? They must be fully financed by debt or what here? Equity. Debt, of course, this is what we lump together and call them what here? Liabilities, plus what here? Equity. I mean, anytime you see any assets of, say, for example, RCM, if, for example, you're building, you're doing a few things here and there, these assets cannot stand by themselves. It's either they have been supported by the owners, and the owner support is what we call equity. Or in this case here, we have gone outside there, borrow loans. Great. But you see, in the public sector now, we can't call this what here, we can't have equity. In the public sector, we can't have equity because whose money is that? You can't say that you are the owner. Government is the whole nation. All right. Whatever we have there as leaders, whatever we have there representing us, they're basically our leaders. You can't say that whatever has been invested, for example, in Kenyatta National also belongs to Dr. Ruto. No, it belongs to all of us. And that is why for us, whenever you see this concept of accumulated fund, this will be the same as what here? This will be the same as equity. This will be the same as equity. So whenever you see accumulated fund, that is equity. That is equity. That is equity. So don't take that as a revenue, nor what here an expense. That is equity, and it shall be able to go to our balance sheet equivalent, which is a statement of financial position. All right. So please, I expect you to tick these things as we go on because I can't tick them here. Now, look at the first one. I can see transfers in from exchequer. Wow. Money coming in from the exchequer, from the consolidated fund. This must be a revenue. So if I were you, I would write there in brackets because you guys have your own papers. You write the brackets R for revenue. Transfers in from other ministries. I will write this as R. It's revenue. Transfers out to other ministries. To other ministries, they have worked for us. We've given them money. This must be an expenditure for us. This is an E. I'll write E there. All right. Fines and penalties. This automatically is our revenue. This is our revenue. Fines and penalties, automatically, this will be revenue. I hope you're writing something there. Wages, salaries that we pay, this must be an E thing. It's an expense. This one has even been written there. Finance expense is an E. Supplies consumed, our stationaries, that will be an expenditure. Revenue from exchange transactions in accordance to what we call IPSAS 9. I will be able to explain that further, but that is R. Premises, of course, our premises, that will be an asset, and for that matter, a non-current asset. Remember, you must, if it's assets, you must classify them. You must tell us whether it's current or non-current. So premises, automatically premises is long-term asset. It's an asset that I will stay with for more than a year. So this is non-current asset. Motor vehicles, this will be non-current. We have computers and accessories, all this will stay with them for a long time. All right, non-current. Furniture and equipment, non-current assets. Receivables, I expect to receive this money as fast as I can. Most of the times will be like 3 months. So it's an asset that I expect a cash flow from, but it will be a current asset. Current asset, cash and cash equivalents, already we have this, it's current. Payables, this is liability. Which liability is this? Current liability. So payables is current liability. Long-term borrowings, this is a non-current liability. Non-current liability. Now, ladies and gentlemen, have we been able to reach where Mwalimu has reached? Have we been able to mark these things? Have we been able to mark them somehow? Please give me feedback. I like feedbacks. And for the students who have just joined us for the very first time, I would want to take this opportunity to welcome all of you to RCM College. Most reputable college, the biggest college, ladies and gentlemen, in East Africa by all dimensions. If, for example, it is HELB, you'll realize that we are the college of choice by all, not all, but majority of the students who apply for HELB as matters pertaining CASNEB, they always choose what year? RCM. Yeah, even the cash payers, the students who are paying for themselves. All right. So please make a wise decision to join RCM. We do much more than just teaching. You know, like the experience that I bring here, I'm proud to always tell you my experiences. For example, I was the lead consultant, and this is something you can even ask anybody there. Yeah, I was the lead consultant in terms of IPSA's implementation at IGAD, International, or rather Intergovernmental Authority on Development, IGAD, smaller version of AU. They were implementing IPSAS. I was able to implement with a team of 3 people. We implemented them from the beginning to the very end. And we were able to get, in this case here, an qualified audit opinion from none other than EWC. Yeah. The other week, I was also doing something for the Ministry of Transportation, Rwanda. Yeah, they travel all the way. Kenya here. Yeah. And unfortunately, here we have also Rwandese students, yeah, who are doing accounting, yeah, which is very good. So we are giving you practical experiences. We are not just theoretical teachers, no. We are not just theoretical teachers, no. We are giving you practical experiences. All right, then if you'd allow me, ladies and gentlemen, I will be able to, yeah, thank you so much, Yeterari. Thank you so much. So then we shall be able to do this statement of financial performance. So we start with revenue. So we are simply copying down because now we have been able to identify them. Once I identify them, I should be able to earn those 6 marks pretty fast. So we start with the transfers in from the exchequer. Transfers in from exchequer. Transfers in from exchequer. I can see 6320. 6320. 6320. Then we have transfers in from other ministries, money coming to us. That is our revenue. Transfers in from other ministries. From other ministries. So from other ministries, I can see 1870. And whenever you pick a figure, please tick it, so they don't get to choose it again. Yeah. Then we have fines and the penalties. This is our revenue. So we have fines and the penalties. Fines and the penalties, 2240. 2240. After that, ladies and gentlemen, we have revenue from exchange transactions. Revenue from exchange transactions. Revenue from exchange transactions. Revenue from exchange transactions. We have what we call 6730. 6730. So please, before I explain what revenue from exchange transactions means, are you able to confirm again that we are together up to here? Somehow. So is this the introductory class to FR? Yes. Yeah. So Francisca Ouya has confirmed. Yeah. So please give me the total as I get to explain what in this case here this revenue from exchange transaction stands for. Thank you so much. Yeah. So please give me the total now. Total revenue. Yeah, so Francisca Ouya is giving me 17,160. 17,160. Is there someone else who is able to confirm these figures, and gentlemen? Anybody else who is able to confirm this figure? So remember, these figures are in shillings, millions. Yeah. Very important. All right. So I hope you have been able to confirm. Thank you so much, Angie. Already I can see that. Now, there are 2 types of revenues that these entities will always make. These public sector entities will always make 2 types of revenues. We have revenues under IPSAS 9, and then we have revenues under IPSAS 23. IPSAS 23 is revenue from non-exchange. Revenue from non-exchange. Revenue from non-exchange. And then we have IPSAS 9 is revenue from exchange transactions. From exchange transactions. So revenue from non-exchange transactions. Revenue from non-exchange transactions. Now, ladies and gentlemen, I would want to start with the IPSAS number 23, which says revenue from non-exchange transactions. Public sector, it will always get a lot of help from so many parties. There are parties, for example, if you look at a church like Catholic Church, when you go to Catholic Church, this priest has finished preaching and he has really preached very well. So in this case here, you as a congregant there who has had those nice preachings, what do? Offertory. So in this case here, you offer to give something, an offering. So when you give this offering, is there anything you're buying from that priest? Is there anything you're buying from that priest? No. The only thing that will happen is that you'll be able to get sufficient grace from the Lord, not from the priest. The priest, you have simply given him money. There is nothing he's giving you in return. So you see then that revenue he has earned, you will call it revenue from non-exchange, because as a priest I've received, I have not given anything. So it is revenue from non-exchange. So somebody may make an argument that there are churches that I will go, I give an offering, and then, for example, they give me a bottle of water. A bottle of water. Would you call that really an exchange transaction? Maybe the bottle of water is worth, say, 20 bob, but you've given 1,000 bob. So this is a giant versus a dwarf. So that cannot be exchange. Yeah, thank you very much. Yes, Shedi, donation is a very good example, yes. Yeah. So anytime you hear of donations, transfers in from other, those languages transfer. Like now here, these three will be ipsas 23. Ipsas 23. Because basically we are giving you money and there is nothing you are giving us in return. There is no trading, no buying and selling. All right. But now, ladies and gentlemen, if you look at this Catholic Church, if, for example, today you decided to go and do your BCom at Catholic University, all right, you can't just walk in there and say, this is an institution that belongs to a church that I'm now going to study for free. You will be chased away. You will, in this case here, buy an education. You'll get an education, but you must give fees. You must give fees. You must give fees. All right. Then that becomes what we call revenue from exchange transactions, which must be disclosed as such in accordance to IPSAS 9. Now, ladies and gentlemen, I hope you are able to see donations you're given for free, fines, penalties. You simply get somebody who has been able to erect, for example, a board on the road, and then you fine them. You see, at the end of the day, that fine really, is non-exchange. Is non-exchange. Gifts, yes. You are gifted. Yeah. If you're gifted, like now today, I'm giving you guys a gift. These are free of charge class. This should be the perfect example of non-exchange because I'm giving you very good service and I will not want you to pay me even a single cent other than you guys giving me referrals. You must bring me students. That is the kind of payment I would expect you to do for Mwalimu. Yeah, great. So ladies and gentlemen, then are we together up to here? Are you able to differentiate between revenue from exchange and revenue from non-exchange transactions somehow? So for non-exchange transactions, you are basically being given transfers, you're being given like donations without you giving any service or a product in return. Then that is called IPSAS number what year? IPSAS number 23. IPSAS number 23. It will be very good for you to do what year? Yeah, to understand that. Now, ladies and gentlemen, from there, go ahead and now give me expenditure. Yeah, expenditure. So you give me here expenditure. Fortunately, we have been able, ladies and gentlemen, to list all of them. So ours will basically be to pick them. Let's pick them. Let's pick them. So now we are picking them. So expenditures, we are picking them. So remember the first one that we identified as an expense is this one here, transfers out to other ministries. And then you tick. The secretary is to tick. Whenever you pick something, tick it. So at the end of the day, you'll ask yourself, how comes I've not picked this one? So that, you know me, I can forget because, you know, those things are very many and I'm using a screen. So you guys have the physical paper. Please tick. So the first expenditure there is transfer out to other ministries. other ministries, transfers out to other ministries. How much is that? So we have here 860. 860. Then we have wages and salaries. Wages and salaries. So wages and salaries, we have 1960, the year that I was born. Very old, but young at heart. Then we have finance costs, which is basically interest. So we have finance expenses. Finance expenses 680. Finance expenses 680. Then we have our stationery, our supplies are consumed. Supplies consumed. So supplies are consumed. How much do we have there? 1790. So is there somebody who is able to give me this total? Is there anybody who is able to now give me this total, ladies and gentlemen? You add, you can see I've taken this back. You can also write on top here, shillings, millions, to have like 2 columns. So somebody give me this total. I'm really dependent on you. So Bernard Chumo gives me 5290. Bernard Chumo has given me 5290. Then now I should be able to deduct from this, and I can see that I'm getting surplus. So basically we have here surplus for the year. So we have here surplus for the year. Surplus for the year. How much are we getting a surplus for the year? This minus this. This minus that. 11,870. This is really very good. 11,870. And you see, like CIFA is a public sector entity, but it is so much in this case here, ladies and gentlemen, good to the national government because they do not depend on the exchequer. Yeah, they're able to create their surpluses. Yeah, surplus that they're even able to support the CIFA Foundation with, the one that is now giving you guys loans. We want public sector entities to reach that level where they don't have to lift their arms to the public exchequer. Yeah, support. No, they should be able to organize. They're charging very little fees. Yeah, but through that, then they should be able to do what here to really work it out to see that they're getting surpluses. Yeah, what will it be called if it is a loss? If it's a loss, it is a deficit. Yeah, deficit for the, if it was a loss, it would have been called deficit for the year. So then how do they mark? Remember, these are 6 marks. They'll take this. We rarely mark these totals, Rarely. We rarely mark these. So any 3, not any 3, any 6 at 1. Any 6 at 1. So 1, 2, 3, 4, 5, 6, any. So even if some of them are wrong, but just any 6 at 1, you have your 6 marks. We have our 6 marks. So can I go to the next statement, which is part 2, the statement of financial position? Part 2, they want us to give them statement of financial position. Statement of financial position. Statement of financial position. Can I go to it, or is there a question still here? Great. So then we go to number 2 of this. Already we have marked them. So long as I've done marking as a good footballer, it's just all about how you map things. You've seen in this case here, there is that player there who is weak. That one is like this. I'll be able to penetrate like this, and I'll be able to score. I've marked my ground. I know what is revenue. I know what are expenses. I know what are assets. I know what are liability. Then I'm at home. I'm now at home. I'll get all the marks without thinking. Statement of financial position as at 30th June, 2023. Very easy. So right there, Ministry of Public Works. Ministry of Public Works. Ministry of Public Works. Ministry of Public Works. Statement of financial position. statement of financial position as at 30th June or something, as at 30th June 2023. No more things, ladies and gentlemen. I have to start by accounting for the assets of the entity. So we start with the asset. So we have here non-current assets according to Ipsos. Non-current assets. Yeah, non-current assets. We have already been able to mark them. So ours is to pick them. So the first non-current asset that I'm able to see here is this one here, premises. So we have here premises. So we have here premises. How much are we seeing there, ladies and gentlemen? I can see 26,390. 26,390. Then the second item that I'm able to see there, I hope you are able to see, premises stands for land and buildings, the buildings basically. So they are long-term. Then we have motor vehicles, 2350. Motor vehicles, 2350. Then, ladies and gentlemen, we have computers and accessories. So we have here computers and accessories. Computers and accessories, 1430. Hope you're able to see computers and accessories, 1430. And then we have, ladies and gentlemen, furniture and equipment. So we have here furniture and equipment. Furniture and equipment. How much do we have there? 3320. Give me the total for our non-current assets. Is there somebody who can give me the total now for our non-current assets? The various exchanges, difference between, are you talking about exchanges in foreign currency, or which exchange are you making reference about here? Maybe you could expand on that. You could expand on that, and then I'll be able to answer you. So we are getting two students confirming that this is 51,490. 51,490. So then, have you guys been able to copy up to here? Have you guys been able to write up to here? And of course, have you been able to understand? That is the most important. Thank you very much. Those are non-current assets. So go straight away and give us the current assets. I'd marked them. And I'm ticking them. So now give us the current assets. Slowly, we have marked them. Current assets. Those are those assets that you shall be able to enjoy their fruits within 1 year. Already have cash with me here. I can decide and go and eat something today. I have people I expect to pay me receivables. Those will be what year? Current. If I happen to be having like inventory, that will be current, etc. Yeah, still I'm not able to understand your question, the difference between the various exchanges as income. I don't know whether there is somebody who has been able to understand this question, maybe to help me better. So I would want to know that exchange. Are you talking about maybe that difference between revenue and expenditure? Or what are you talking about there? All right, great. Is it exchequer? Exchequer. Are you talking about exchequer? Exchequer. So the difference between so you see, exchequer is the national treasury, is the consolidated fund where we will have all the monies, the taxes we pay, etc. will go to KRA. KRA transfers this to the National Treasury. The National Treasury is also looking for monies from everywhere. National Treasury, these guys are through central bank, whatever, they are raising money from the domestic market, international markets, and they're doing crazy things, many things. All that money for government will be put under what we call the exchequer. So it is from this exchequer that we shall be able to get what year we shall be able to get monies for supporting the various ministries. So when, for example, a ministry like Ministry of Water gets money from an exchequer, from the exchequer, then that will be revenue. So transfers in from the exchequer, that is revenue. This Ministry of Water will also be, in this case here, for example, helping other ministries because they're doing some kind of business. They're working together. All right. So when it transfers, in this case here, money to another, it will be transfers out to other ministries. So it becomes an expense. So anything that comes from the exchequer to us is revenue. But when we pay ourselves to other ministries, transfers out, it becomes what here? An expenditure. So I hope you are able to understand that. And if not, please feel free to just keep on making comments there. I'll be able to pick it. Thank you so much. All right. So then do we have this current? Yeah, remember we have receivables, then cash. So we have receivables, receivables over how much? Of 13,680. 13,680. And then we have, ladies and gentlemen, cash and cash equivalents. Cash and cash equivalents, cash and cash equivalents of 1290. 1290. So you don't have to show like the sum of the current assets only. What you need to do is to come and just take the total figure that you have here plus this for you to give me the total assets of the firm. Total assets of the company, and then you call this capital A. Total assets of the company, and then you call this capital A. So you take this plus this plus this. Oh, ipsas 9, ipsas 23, okay.
Hi, ladies and gentlemen. Unfortunately, we've gotten a power blackout, but we shall overcome. So when the power comes back, I will be able to invite you so we get to enjoy the question to the very end. So it is my hope that whatever small we have done, you guys have been able to follow. And any student, of course, who is out there, who is still looking for a good college to join, don't hesitate. RCM is the place to join. So please call us today. Our number is 0793 555 000. Otherwise, for now, from Mwalimu to you is bye-bye. Just be on the lookout for another link to finish the question. Thank you. And thanks for joining. Bye. Thank you so much.